beaches that we have, and we're just talking about it, how we definitely have to promote tourism more in this country, because there are places that we need to go that can still undiscovered, and we need to nice one. Like, we're gonna see things. I don't want to put you on the spot for this week, but is it still things that are being sentiment driven? What's going on?
Well, the market for is been driven by sentiment.
Yeah.
From fundamental point of view, most stocks still look. In fact, our index still look pretty much very attractive. I think aside Egypt, Nigeria's equity market is about the cheapest in Nigeria.
Right, right.
So what we should be seeing
in
now
Africa,
is,
in
Africa, sorry, in Africa, sorry. So what we should be seeing now is we should be seeing massive investment into the equity space. We've seen foreign portfolio investors, coming to take position on attractive names, and even the local guys also doing same.
Yeah.
But over time, we've seen the market broad most of the things over time. So it has pretty much been driven by sentiment. Many people have valued that to elections, which is not unlikely also. But what we've seen is the sell-off is across major emerging markets,
right?
And it's just what's been happening everywhere. And I think that's linked to the higher interest rates in developed nations, particularly the US.
Okay, they did that. What was it now? Was it last Wednesday or Thursday?
Yeah, last Wednesday. Okay. Last Wednesday, the US Fed increased its benchmark interest rate.
Okay.
By 25 basis points to 1.75 to 2% range, which is very high. They started the hawkish process sometime towards the end of 2016.
Okay.
And what we've seen is the Fed has continued to increase interest rate on that front. So, like I said before, for major emerging markets, we've seen a massive repatriation of funds from those markets back to the US.
Yeah, yeah.
So what we've seen is that has also driven the US Treasury yields very high.
Yeah.
It touched an high of 3%. It crossed the 3% psychological level.
Okay.
Sometimes in April, and we also saw it do that last week after the announcement of. I think it has lots of impact in Nigeria.
Okay.
Last month, I think 2 months ago, we saw massive build up because most investors were selling off their equity positions and also bonds and money markets. And most of them wanted to take their funds out to take advantage of the rates at safer havens. So we think the Fed increasing interest rates. To me, it has not been fully priced in.
Okay.
Immediately they increased the rate. We saw yields move back to that 3% level.
Right, right.
And there are even prospect that it might even move up further. So I think it's not too good for us here. Although what we've seen is the CBN has become increasingly responsive.
Right.
And they've increased OMO rate by 15%, and they might continue to do so. We've seen them, they are very, very aggressive at their OMO issuances now.
Yeah.
Just to keep things attractive for the foreign guys. So we don't see that massive repatriation of funds.
Right.
So for now, it's not really looking good for Nigerian emerging market at the moment.
Gotcha. Okay, I'm glad you mentioned the central bank, because I'm showing here that there's some particular foreign investors that think the Naira will remain stable. In particular, Franklin Templeton and BlackRock. They're over in the West, and they invest pretty heavily in emerging markets. So I'm sure you had this in Nairametrics headline here saying that they're thinking that the Naira for the foreseeable future should stay stable. What do you think?
Yeah, very true. I think I agree with them. Although maybe not beyond 2018 for me. I think with elections coming on board in February next year, the CBN and also the fiscal side will try as much as possible to keep the Naira stable. But the question is, how far is CBN willing to draw down on his reserves?
Right.
Because over the past couple of weeks, we've seen the reserves deplete. I think it has depleted over $400 million over the last couple of weeks. So the question is, how far are they willing to draw down the reserves? But from where I stand, I think they will, because being a pre-election year, they'll try to keep the Naira at that 360 levels. Although if they go aggressive on that, that might still come pressure at the parallel market end.
Right.
I'm sure we all remember what happened in 2016, where we saw widespread between the parallel market rate and the interbank rate.
Right.
So I think the CBN will try as much as possible to avoid that. As well, they will try as much as possible to avoid that, and they will also try to keep things stable at the interbank rate.
So we might
see, the balancing out. So we might see the reserves draw down a little as a result of CBN's increasing intervention in the market. We've seen them intervene more than they usually do before, just because they want to keep things stable. So we think not until next year, after the elections, we just think the CBN will just sort of micromanage that space and keep things attractive. So next year we might see probably a slight depreciation of Naira after the currency, because they can't continue to.
It can't continue forever. Interesting.
Benga Kamu sending a message here on WhatsApp. It says, "Will budget signing tomorrow not inspire the market in the upward direction, or it's not significant?"
Benga, thanks for your question. Benga, what are you even doing on your holiday? How are you doing? Benga is a frequent listener.
Yeah.
Thanks for that question. Damilola, do we see this affecting the markets?
Well, it should.
Yeah,
it should.
You think so?
Extent. Yeah, it should to some extent, because the budget is expected to drive economic activities this year. What we see is, being a pre-election year, like I said, we might see lots of construction works. We apply for the construction works that might affect the cement guys, positively.
Right.
Another space too. So it's actually a positive to the market. But the question is, will investors react to that sort of news? Because, like we saw before, the GDP came out, market didn't react. We've been seeing inflation's come down,
market has not reacted.
So we might not. We might just be shocked. We might not see them react.
I don't think the markets will react. They've delayed this budget for so long that the market just shrugs its shoulders. Okay, so we're still on currencies. This is another interesting one from our good friends at the BDCs. The Association of Bureau de Change Operators of Nigeria over the weekend urged the CBN to approve Chinese currency disbursements, the Yuan, to its members for PTA and BTA. They said that they should use that for PTA and BTA to deepen the swap deal for us out there. Are there enough? What do you think? Is there enough demand out there for them to include this in the swap deal?
Well, that's a story. It's actually a very interesting one.
Yeah.
Because in the context of things, the swap deal with China, like we said before, is actually a drop in the ocean. Because when you look at Chinese imports into Nigeria, is running to about $13 billion, and in dollar terms, the swap deal is only about $2 billion.
Right.
So that's not even enough to cater for our transactions with China.
Right.
So coming to say we should transfer the funds, or use the funds for PTA and PTA, I don't really think it is the right thing to do. So from my hand, I think what the BDCs are trying to do is they're just trying to get themselves involved.
Yes,
in the deal.
get some more business for themselves.
Exactly, get some more business for themselves, because the swap deal only involves banks.
Yeah.
And the reason is understandable, because the CBN is trying to promote import of Chinese product, and to make sure there is smooth transaction at that end. So that's why they are involving banks. But I think the BDCs are just trying to get themselves into it, and it's going to be very, very difficult.
Yeah.
Because even for banks, not all banks are participating.
Right. There's only like
only like four
Yeah,
banks
yeah.
that have that have China and all of that. They have the economies of scale to go ahead with this. So I think the BDCs are only just like you said, just trying to get more
a piece of the action.
Get a piece of the action.
All right, good stuff. Okay. What about stocks? I guess I won't say this week, just short term, long term. Any stocks you particularly like? For of course, guys out there, if you're listening, just remember that you do have to consult a broker, do your due diligence. Talk to people like ARM before making any buys or sells. Damilola, what do you have? What do you like out there?
Yeah, we like Okomu.
Yeah.
At the moment, we have a buy rating on Okomu. We have a fair value estimate of 102 Naira, 3 kobo on Okomu.
Okay.
And the reason for that is we're expecting strong volumes for them this quarter. Over Q1, they posted very strong volumes in Q1, and we expect that to to go ahead into the rest of the year. Although Q3, Q4 is usually a weak quarter for them in terms of volume growth.
Okay.
But starting the year with about 9,000 metric tons on volume, which is way higher than what they've usually been doing. It's actually a good note to start. And also, we also expect lower cost for them compared to their peer Presco.
Okay.
Okomo is very efficient, when it comes to cost.
The cost,
to cost.
Okay.
So we're expecting their cost of goods sold, to remain at lower levels going into the year. And notably, they paid down their foreign debt.
Okay.
So they are no longer, we won't see that foreign exchange losses, that volatility anymore. We believe these three things to drive a positive year for Okomo going forward. We have a fair value estimate. Like I said, of 2 Naira, 3 kobo. And I think the stocks currently trade around 80 Naira at the moment.
Right,
so there's still over 20% upside on the stock.
On the stock, yeah. All right, cool. Okomo. Okay, so what else you got?
Yeah. We also like First Bank.
Okay.
We have a fair value estimate of 40 Naira, 40 kobo on First Bank. Also, that was revised downward from 16 Naira, 69 kobo for us. And the reason why we revised that was due to lower loan book forecast. We cut down our forecast for loans by about 2%.
Okay.
Year on year, but overall we still have positive outlook for them. We expect the asset quality to remain on track. They've been cleaning up their books, for about 2 years now.
Okay.
So we expect lower asset quality for them. We expect NPL ratios to come out at about 18% as against 22.8% in 2017.
So that's lower. Okay.
So we also expect lower provisioning for them. We expect cost of risk of about 6%, lower than 6.4% in 2017. So by and large, we have a positive outlook on First Bank also.
All right.
Same thing too for UBA too.
UBA as well, yeah. Only got about less than a minute, yeah, Valentine.
50 seconds.
Yeah, okay, 50 seconds. Okay, you know what? We saw a funny story in Nairametrics. How the stock market behaves in World Cup years.
Active.
There's no pattern. I mean, like
spiral.
the 86 World Cup was down, 94 it was down. I think it was it 2006 it was up. So it's just interesting to read how the stock market behaves in World Cup. There's no impact. It's just a random thing.
It would be interesting to see what factors affect it.
Exactly. Yeah. But totally random. So you guys check it out. I'll tweet it and you guys can read it how the stock market behaves in World Cup years. Damilola of ARM, thank you so much for joining us today.
Thank you, Damilola.
All right.
And that's it for Business Express. Join Rotus on Twitter and ask him whatever questions you've got. It's at Rotanquotes.
Yes.
Yeah, with a K.
Yes.
All right, coming up next on Smooth 98.1 is Frankly Speaking with Muyiwa Falabi. And remember, right after that at 7:30, we'll be joining our analysts inside of Freshly Pressed 91 for the detailed analysis of newspaper stories. Good morning.
Business Express.
Thank you.
Take care.
Every Monday to Friday at 6:45 a.m.
Well.
I am Kiwa Hirach, and you are listening